Okay, hey everybody, Mark Arnstein, Remax Hallmark, and of course, NorthTorontoLiving.com. This is vlog number 13. I'm here with my very good friend, Mr. Peter Puzo from Dominion Lending Top Producers. Peter, thanks for coming out today. I really appreciate it.
Thanks for having me, Mark.
So what I want to talk to you about today is mortgages. Obviously, you are a phenomenal mortgage broker. We've been using your services for many, many years, and our clients love working with you. And we get asked these questions all the time, about where's the market going from a mortgage standpoint, what are the best practices when dealing with a mortgage. We can conquer so many different topics. There's obviously there's pre-approvals, there's all kinds of crazy stuff out there. Right. So first off, let's just go into quickly, what do you see right now going forward? We know what already happened with 2020, but going into 2021, where do we see this stuff going, and where's mortgage rates headed, basically?
Well, so we'll talk about variable and fixed rates quickly. So the variable rates, the Bank of Canada has been very transparent with us. We're not expecting any movement on the prime rate till 2023.
Oh, for 2 years?
Yeah, so variable rates are gonna stay where they are, and maybe even longer. The financial crisis of 2009, the prime didn't move for 5 years.
Right.
So it's possible that history repeats itself.
Okay.
And on the fixed side, look, again, we got historical lows, rates as low as 149 on a 5-year fix, depending on your down payment. Will they move? Potentially, but I don't see any big movements coming.
Okay, so 149 on a 5-year fix, which is absolutely redonkulously low. I mean, I remember when I got my first place 20 some odd years ago, I had 6.25% for a 5-year fix, and that was unheard of then, right?
Yeah.
So 1.5%. So what is that? So I think the easiest thing for people to understand this is per $100,000. What does that work out to on a monthly?
Well, it depends if so I'm talking about CMHC insured rate. So we're talking with a 25-year AM.
Right.
So I usually use, $4, $40 per thousand.
Right.
$4 per thousand, sorry.
Right.
Very cheap. $100,000 mortgage is about $400 a month.
Wow.
So you got, conversely, $1 million mortgages carrying for under, about $4,000 a month.
$4,000 a month, yeah.
Yeah,
wow.
so very affordable.
So you think so if you got double income right now and you got two people with two good jobs, then $1 million mortgage today is really not that big of a stretch anymore.
No, and keep in mind, we are still qualifying clients based on the 5-year benchmark or stress test rate, which is 479. So there's a big buffer built in. So not only is the payment still affordable, but there's a buffer there that if rates move, the clients will be able to afford the payment going forward.
Now, from a qualification standpoint, I get asked a lot of questions. People are because of COVID, are there any restrictions that the banks are looking for, or putting, different processes put in place?
Great question. Well, one of the things they ask is how has COVID impacted your specific client?
Right.
So if my client is a restaurant owner, that's a problem. They don't care what he earned 2 years ago. What's he earning today?
Right.
Fortunately, if you're in banking, finance, IT, it hasn't really been much of a problem, but that is definitely a question that comes up on every application.
Okay. So now moving forward, are you recommending people go into fixed or go into variable?
Look, I've always been of the belief that if you're going variable, you're assuming some sort of a risk, and you should be compensated for that risk. In my professional opinion, that risk today, which is about 1/4%, is the compensation you're getting. When you compare a variable, let's say at 1.4 and a fixed at 1.65 or 1.7, it's not enough compensation. So even though we know variable rates are not going to move for the next 2 years, 3 years, I still encourage my clients to take a 5-year fixed.
Well, I mean, you got the guarantee of 5 years not knowing, and with rates being as low as they are today, why
you
even
can't
bother?
Lose.
No, exactly.
You had 6.25. My first mortgage at 5.99, so I didn't do that much better. So this is crazy. It's great timing. Great timing for clients.
For sure. And any issues with refinancing as far as that going forward? Or?
No. We do a lot of situations where you'll bring me a client, refinance, pull out some equity, buy an investment property, buy a cottage. There's lots of that going on.
And actually, it brings me to my next point right now, because money is so cheap. So if you're sitting in a situation right now where you got phenomenal equity in your home, with very little mortgage sitting there, it is really, and I really do believe this, is a way to diversify your wealth a little bit and pull out some equity and buy that income investment property. And is that easy to do, hard to do?
It is easy to do. So we're seeing a lot of that. And then we're also seeing the clients say, we've got a lot of equity, let's buy something a little bigger.
Right.
So absolutely. The timing is great. And COVID has really pushed the recreational property market to levels we've never seen before.
Oh, I know.
It's a place to go. When the government tells you can't leave your house, So it's great.
No, for sure. And that's what, we know, like, I mean, I'm not going to get into this. This is a whole different conversation, getting up into Muskoka stuff and what's happening up there, but which is not on topic today, but that's a whole nother conversation
it is,
we
for sure.
should do later.
For sure.
But I think, and I've talked to so many clients about this, and we've had conversations about this, that where you can diversify that opportunity to your income and your portfolio to take on that investment property right now. Has never been a better time to actually do it, because the affordability factor is so good to buy and grab those pieces of investment properties.
100%.
Yeah. And with that, typically you need how much money down?
20% down is the minimum for an investment property.
Right.
Again, depending on whether you're buying a condo in Toronto or something in Lawrence Park, it may alter a little bit, but the minimum is 20%.
Right. Okay. And now, just to wrap this up really quickly, if people want to reach out and have any questions and ask you about any mortgage advice, what's the best way to contact you?
Yeah, just either you just Google us, call us on our mobile, or just email me, peter@mrmortgage.ca.
Peter, thank you so much for doing this. I really appreciate it. Uber is a bit freezing out here right now. We're shivering, but it's all good. We want to really provide you guys with some incredible information. Thanks for watching. Remember, please check us out on Instagram, Facebook, LinkedIn, and of course, follow us along on YouTube. Have a great day. Be safe. Take care. And we'll speak to you soon, everyone. Peter, thanks so much, buddy.
Thanks for having me, buddy.
Appreciate it. Bye-bye. Peace out.